Okay, good morning, guys. I hope everyone had a good weekend. Looking forward to the week. This is really the last full week of 2014. Obviously, Christmas disrupting next week, New Year disrupting the week after. So it is the kind of last push into year end, and we've got a decent amount on the schedule, but it is looking like Wednesday is going to be the big event this week. Two things happening on Wednesday that will really shape the week, I would suggest. Number one is the Federal Reserve meeting, their final meeting of the year, and really all eyes on Yellen and whether she will drop the considerable time. Those two words will become the most important two words of the week from Fed monetary policy point of view. We've had some rampant US economic data. This almost kind of anomaly continues. I'm going to talk a bit about crude prices, but certainly, as Bill mentioned earlier, really a switch from that idea that the lower the oil price goes, the better for the global economy, and really should see stock markets going higher. But actually, in the last week, we've flipped, and we've really had a pivot in that view, and actually we're getting oil down, stocks down. Certainly was the case into the end of last week. So it's actually become more of a concern about weak global growth rather than the idea that the market's oversupplied and lower price is fantastic for people like the US consumer. So I'll talk a bit about that, but just talking about the US consumer and rampant data, huge numbers on consumer confidence from the US last week, best numbers since 2007. This is on the back of course, a payrolls number that we got 10 days or so ago that was up in excess of 300,000. And so basically we go into the last Fed meeting of the year with economic data on fire. And you know, the S&P, ever since that payrolls number, if we just look at the S&P chart here, the payrolls number came back on the 5th of December, and as that number was released and just after it, we kind of touched an all-time high at 2,079. That was when payrolls was announced. Ever since, this market's sold off, and the move into the close on Friday breached 2,000, and we bottomed down at 1987. So that is a 92-point sell-off since the best payrolls reading, in recent times, okay, and the best year for job creation for 14 years, and this market's really done nothing but sell off, okay, with some volatility, of course, but it's quite interesting that you're getting this downside. So is this because of the Fed? Is it nervousness ahead of Yellen's meeting and press conference? So there's two words, considerable time, because this is how they're describing the amount of time they'll wait until they start raising interest rates. It's been in the statement for a long time. We will keep interest rates low for a considerable time, and the market, roughly speaking, has translated this into meaning 6 months. So there is a chance the Fed might drop this. I think it's a kind of 50-50 thing. That's what everybody's going to be watching, are those two words in the statement or not? And from that, we will get either a very hawkish or a very dovish reaction. Okay, those out there that are looking at the inflationary conditions and are so I'm just getting a private message here. Those that are looking at the inflationary conditions will be saying that inflation remains benign, and so the Fed should keep their dovish stance. But those hawks, those that are looking at the economic data, are saying, of course, that now's the time to drop this language. You know, we can't justify rates at rock bottom anymore. Let's get on with getting this economy back to normal. So there's two camps, and they've got strong arguments, and really could go either way. So that'll be one of the big events of the week, obviously. Also on Wednesday, though, on top of the Fed stuff, it's the Greek presidential election, round one. And of course, we've had some violent movement on Greek markets in recent weeks. Their stock market's been absolutely hammered. You've got yields on Greek yields are up on the over 10% on certain durations, meaning that the idea they can jump off the Eurozone bailout bandwagon at the end of this month, of course, are now completely gone. They cannot survive on their own. They need an extension to their bailout package. And really, this presidential election has become almost like a referendum as to whether we'll have a general election or not. And so if we do have a general election, then the fear is that the Syriza party, the opposition party, will move into power and will want to renegotiate the deal with the Eurozone in a way that the Eurozone may well not accept. And so the Greek exit risk has flared up, and this all will certainly come to a peak as we get the first round of the presidential election. And we kind of need the Samaras, so the Prime Minister, we need his candidate to get voted in, and then we can avoid a general election. But really, again, that could go either way, so there is risk out there. So these are the big events of the week. What I'm going to do actually is, just before we talk about the markets, let's just go through the weekly calendar. So what we've got here today is a fairly empty calendar. Certainly this morning, there's really nothing of any interest, I'm afraid. So this afternoon, we've got a couple of bits of info that might be of interest. So we've got the Empire State manufacturing figure. This is the New York State regional manufacturing number. This is a decent number, along with the Chicago and the Philly Fed numbers. These are lead indicators. It's soft data, it's surveys, and it's for December. So actually, it's the New York number that typically is the first economic measurement we get for the month of December. Of course, most data comes after the month finishes, like the industrial production data we've got today. That's for November, so it's backwards looking. But the Empire numbers actually bang up to date, and that's why it's of interest. So we're expecting the number to edge above last month's, up to 12, and then we got industrial production coming at 215, and we're hoping that to rebound. Last month it was negative, so that's we've got ECB's Nowotny talking perhaps in 15 minutes, who's on the hawkish side of the fence on the ECB. So let's see how that shapes up. Let me just scroll down here and we can check out Tuesday's calendar, where it gets a little bit more interesting. Tuesday's packed full of December manufacturing and services PMIs from Europe. So we get and China. So we get China overnight. We get France, Germany, the Eurozone as a whole. We get some important inflation figures out of the UK. We get the German ZEW data. We've got housing figures from the US. I mean, this is a packed calendar, so complete opposite really to today. Tomorrow's definitely shaping up as an interesting one. We've got Carney speaking as well, so that may be of interest after the inflation numbers, the inflation data that we're expecting today. If we scroll down to Wednesday, of course, Wednesday is going to be about the presidential election in Greece, and of course the Fed meeting. But on top of that, we've got some we got Bank of England minutes. We've got some employment data from the UK. We've got the CPI, the final reading on CPI from the Eurozone. Then we move into the US, where we get inflation data, and we've got oil numbers, and then the Fed meeting. Okay. Just quickly flick through Thursday. Here we got the German IFO number. This is important data. ZEW tomorrow, IFO on Thursday. We get retail sales figures out of the UK, jobless claims, services numbers, Philly Fed number out of the US, Draghi's talking on Thursday, and then to wrap up the week, German inflation for November. That's on the PPI side. Friday's looking less interesting. In fact, no US data at all. Actually, Friday's looking. I mean, this calendar's quite packed, but it's full of stuff that's not really headline info. We've got a couple of Fed speakers. So Tuesday's packed full of data. Wednesday's very interesting from a political and monetary policy point of view with Greece and Yellen. Thursday's got interesting data, and then Friday looks like we'll be winding